volatility and any time there's change, there's opportunity. Now, I say it's great because I've taken a whole different approach to investing than most people. You know, I think buy and hold's a crock of I think, you know, the idea that you always have to invest your cash is not far behind. And so I've always been of the attitude that unless you really have a commitment to something, just keep your money in cash, knowing that at some point in time, there's going to be a week or two like we've had.
But how much time, I mean, you've got a lot going on in your life. How much time do you have to actively manage your portfolio through these 500-point market swings?
Well, see, that's the whole thing. I don't have to spend much time until it hits the fan. Right, so I mean,
a lot of hitting the fan this week.
Well, that's exactly right, and that's where the opportunity is. Like, I wouldn't look at my portfolio, or you know, I get a one-line, one-number statement every day from my bank, and you know that tells me if anything weird happened, and I wouldn't even look at it. But then when everything starts getting crazy, I call it the World Series of investing. You know, that's when you start digging in, and it's because of the approach that I take. So, you know, back in 2006 and 2007, I was writing blogs saying, look, the stock market's for suckers. You're getting put, you know, when you sit down at the business table, you always look for the sucker. And if you don't see it, it's you. And you've got all these professional people on the other side of the trades. I mean, when I started trading stocks in the early 90s after I sold my first company, you know, you could understand different elements of the market better than the professionals. So I can understand, you know, new technology from Wellfleet and Synoptics and all these old technology companies better than the traders. Today, there's so much money in these huge hedge funds, and then they have such professional research and in-depth research, there really aren't any advantages for the individual traders. And so my approach has always been, unless I know something specific, put it in cash. And so
what are you investing in? What are the areas that you feel you know?
What I did in 2008 and 2009, I put everything into MLPs and MREITs, mortgage-backed securities, ones that I thought were the better companies, and I just piled in. And I also piled into Australian bonds because I thought the economy was good next to China. It was my way of playing China.
So you make one-way bets. This isn't portfolio balancing you're talking about.
No, all that asset management, you know, diversification, that's for idiots, right? Because you can't diversify enough to know what you're doing. Right? I mean, I did my homework on Australia, right? I did my homework on the MREITs. I did my homework on MLPs, and their pricing had just gotten crushed.
So what are you doing right now?
So what I did right now, I'd been going all the dividends and everything. I just put into cash, and so I don't think stocks have fallen enough to just to say any particular stocks are cheap. Right. So when I looked at the MLPs in 2008 and 9, they were paying 18, 19% for companies that had never missed a payment. Right. Had always put out all their cash, and they looked dirt cheap. Now, you know, you look at good companies. Apple hasn't fallen that much, and just to be down 10, 15% from their highs, they're still not as low as they were 18 months ago. And so what I did was I said, self, there's going to be a lot of volatility. So I bought, took a little bit of money and bought out of the money calls on the spider calls. I bought on the Standards & Poor's, the SP 500, and then I did the same thing on the diamonds, which is the Dow Jones. So I bought those long when the stock prices cratered, and then when we had the big, not today, but the big run up before, I bought a bunch of puts, knowing that even though I was paying for a lot of volatility, that I thought there would be a lot of swings in the market. And so you're just betting on volatility. I'm just betting on volatility.
And how long is that going to last, in your view?
No idea. And that's the whole thing, right? People aren't buying intrinsic value in companies anymore. The whole Warren Buffett approach works great for Warren because he can put $3 billion into an investment and take a whole different approach than John or Sally Doe investor who can't do that.
Yeah, but so what? So you say buy and hold is a crock of something.
Right.
I can't remember exactly.
Yeah, Shinola. Yeah.
And you said that portfolio balancing is a waste of time. So what are John and Sally Doe supposed to do?
Depends how much money you have. Right? So the best way to get a return, let's just say you have $50,000 in cash. It could be 10, it could be 100, but you know, let's use 50. First thing I would do is pay off all your credit cards because that's costing you 18%. That's what John and Sally should do first. Most don't, right? There's more credit card and student loan debt relative to personal income than there's ever been in the history of the United States. Second thing you do is you use the transactional value of cash. A lot of people say, you know, you're losing money to inflation when you just have cash in the bank. completely disagree. I know I'm going to be buying a bunch of toothpaste for my family. I know toilet paper. I know all the consumables that I have. I can take my cash and go get a better value. I can take my cash and go
What do you
buy service.
store up?
Yeah. Yeah, why not? I mean, how much space does toothpaste take, but you're going to spend. But that's the whole thing. The time it takes just to figure out your budget, which nobody does. The time it takes just to analyze your spending habits, you can get a better return and you'll end up with more cash than trying to fight the John Paulsons of the world and these guys who have hundreds of analysts who are working for them. Why would you try to do better than them?
You can't win.
You can't.